that there are things afoot that are very dark and secret, and BlackRock tries to keep all of these things secret. I have exposed how they came out with the largest real estate downturn fund in history. At the time that I reported on that, it was 30 billion under management, get money that was getting ready to take your home because they see something that most people don't. And what I'm going to be talking about is rumors and yet not rumors at the same time, because I think there's about to be an evolution in the disclosures that come out of this massive fund that we call BlackRock. Now, there's a quote that's going around the internet, and it is by a hedge fund, an extremely successful hedge fund manager that made literally over 4,000% returns during the COVID lockdowns. He says, "We are in the greatest credit bubble in history, in human history." And that's not my opinion, that's just numbers. There is no question about the fact that we are living in an age of leverage, an age of credit, and it will have consequences. And we're going to get to that in a little bit later. But I want to talk about some things that are happening as far as BlackRock exiting US markets. It says here, and this is on OATUU, OATUU, BlackRock, the financial giant known for its massive presence in the investment world, has recently made a surprising move by exiting US markets. The decision has left many investors scratching their heads and wondering what it means for the future of the company and the broader financial landscape. In this section, we'll dig deeper into BlackRock's exit from the US markets and explore the potential implications. Let me start by saying that BlackRock spends billions of dollars getting information. They are an information gathering machine, and they know when to leave or when to exit stage right. The credit bubble that has been blown up since the dot-com crash has been the largest in human history. Never before have we seen something like this. As a matter of fact, we've never even seen in history negative interest rates, yet in the past 2 years, that is exactly what we have found in different parts of the world. BlackRock leaving and exiting US markets is a big tell. They know the timing. They know when the public is about to find out. And in reality, we can only find out through quarterly filings. So the public is usually behind the truth and what's currently happening by about 3 to 6 months, depending on how many quarterly filings it takes for Wall Street to finally wake up to what the big money is doing. It says here, BlackRock's exit from the US markets has been nothing short of dramatic. It's as if they disappeared overnight, leaving behind a trail of confused investors and unanswered questions. Rumors have been swirling that BlackRock's departure from US markets is part of a larger, mysterious plan they have dubbed the Black Tropicular strategy. The company has yet to officially comment on these rumors, but industry insiders have their theories. And I believe, like I said before, that you are going to see more and more of this information coming out by the end of September. It says, while BlackRock may be keeping mum about their motivations, astute investors are reading between the lines. Some speculate that the company believes there are greener pastures outside of the US, which we have seen Larry Fink speak of. He's the head of BlackRock on CNBC. But ironically, Larry Fink went on CNBC about a month ago saying how strong the economy is. That it is a great time for the economy and that it's doing better than they expected. That is exactly what I would expect from somebody that is exiting stage right to say, so that investors would not be spooked by his comments or his sales, merely thinking that BlackRock is selling some assets and raising money for others. Others suggest that regulatory challenges and increased competition in the US have may contribute to their decision. I believe that is completely false. I believe that BlackRock knows that this collapse is imminent and they are preparing and they want to be in cash. Now, again, this is really interesting because what we're dealing with is a ton of rumors and some filings that BlackRock came out with. They have to disclose what their funds are buying and selling. And so there are people that are asking questions right now, well, how does this affect their portfolios? And it says here, naturally, U.S. investors are wondering how BlackRock's departure will affect their portfolios. While it may initially cause some uncertainty, experts suggest that there's no need to panic just yet. U.S. markets are resilient and have a way of bouncing back even in the face of major changes. Now, let me ask you this. What would it have been like if you would have heard that advice from experts? And they're saying right here, experts suggest there's no need to panic, that U.S. markets are resilient. What if you were told that in the year 2007 by an expert? How would you feel in the year 2010 when the stock market was hitting its bottom, or in 2009 it was hitting its bottom, real estate was hitting its bottom in 2010, but you listened to experts in 2007 as the big boys were pulling their money, because that's exactly what was happening. You'd probably feel like a fool, or you'd be pretty angry at the quote unquote experts. It's interesting how we put experts on this pedestal based off of what they've learned, but not based off of their life experience. Quite frankly, an expert can get paid hundreds of dollars an hour to give you financial advice. That's not what I'm doing. I don't have the certificates and the degrees from these fancy colleges, but then they could go home to a house that they rent, to a car that they do not own, and to a bank account that is not full, because they decide to spend their money frivolously doing whatever they want. But that's the world we live in. It's very interesting. It says BlackRock's exit from the U.S. markets may be seen as a temporary setback, but it's important to remember that this financial giant has weathered storms before. I do not believe that BlackRock is exiting because of a storm that it's weathering. I believe that it is exiting to prepare for the collapse, the absolute travesty in the markets that is coming, and they are going to become 10 or 100 times larger as they soak up banks that are insolvent, as they soak up real estate that's being lost to foreclosure. They are looking to be, they already are the biggest, they want to be even bigger. And I believe, quite frankly, that they're working on subsidiaries so that you can't tell just how big they are. They'll have pieces of action and controlling, not controlling shares, but they'll have ways of having subsidiaries where it's really hard. You really have to do the digging to see who owns these companies. But they're going to do it in conjunction together to make the biggest impact for themselves and for the elites as they can during this next crash. Now, like I said, there's some really weird, interesting mixed messages about this exit around the internet, but the reason why I wanted to make this video and bring it to you was because I believe that these rumors and these very quiet murmurings that are going on in the markets right now have complete validity, and I wanted to bring it to you first, just to mull on, just to chew on, because I think as the next few weeks go by, we're going to see more of this come out. And in my gut, I feel that this is going to come out in the news. Like, we're going to see exactly what positions they sold. And I believe that when that information comes out and is made public, that's when certain investors are going to run for the exits on those assets. I believe that is going to be one of the triggering events this coming September, end of September. Most investors honestly invest based off of somebody else's hot tip. They rarely, very seldomly invest things off of their own gut and studying of fundamentals. And that is what causes booms and subsequent busts in markets. And I believe that BlackRock is going to be one of the catalysts. It's just like listening to what or finding out what Nancy Pelosi bought or sold stocks on based off of what they vote on in Congress, but you only get that information 28 days later. The profit has already been made, the loss has already happened, and you get held with a bag. And that's where I think we need to watch people like Jim Cramer telling you what to buy. Because in my experience, as being an investor for over 24 years now, it seems that the talking heads run out right before and then while the big boys are selling to produce liquidity so that they can exit, and then you could be held with the bag. The next 4 weeks are going to be very interesting. Neil, thank you so much for moderating today. I really appreciate you, man. I Can't wait to see you guys in Las Vegas at the Silver Symposium. It is going to be, to say the least, I believe, a rocky time in history, financial history, at the end of September. Can't wait to see you guys. We'll talk to you later. The Economic Ninja is out.